Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on Thursday, March 17th, 2022. Happy St. Patrick's Day to all of you. Just before we get into this webinar, we want to show you our disclaimer. Take a look at this real quick. This is here just to remind you that this webinar is for illustrative and educational purposes only. So we will be discussing what's going on ever since the Fed announcement yesterday, and we have a lot of good topics to talk about today. So, and if you haven't done so already, make sure that you subscribe to Forex Trading Unlocked on YouTube or Twitch, whichever medium you're watching, or MobCrush, or with a couple other sites that we're streaming to, and also share and like it with your friends in the trading community if you don't mind. And also check out the book High Probable Japanese Candlestick Patterns, written by yours truly. It's available on Amazon.com in paperback and Kindle versions. Alright, now let's just get this browser going up for you. Okay, so now we have the live action scene. Here we go. Alright, we have the forex-trading-unlocked.com website pulled up for you. We already pulled up the workstation page, and we have some lines and charts going on. So if you've been paying attention this week to any of our webinars, we've had this upside target zone here of 111.53 to 112.32. As you can see, we're making higher move highs on the day after the Fed meeting. Now, we heard some interesting speak out of the Fed yesterday. Originally, we were all under the impression that the Fed would only raise 3/4 of a point over the course of the year, meaning 3/4 point adjustments. Now, after yesterday, we know that they want to do 7 more. So the question is, will they do them all in quarter bursts, or will they do them in half-point bursts? I would say that they should do half-point bursts. I said they should have been doing that already a while ago. So, but whatever. This is the new Fed speak. So, interesting enough, you would think that you would be getting a dollar rally off of that, but right now I think you have a lot of profit taking going on. So let's take a look at the dollar index. You can see yesterday after the Fed meeting, it took a little bit of a dive. Obviously today it's hitting support again, but it's coming off of highs. So I would be very leery of being too bearish on the dollar index, because right now we've just passed the Fed meeting. We're heading into the end of the week. This is profit taking. So I would say that right now you got to remember that this Euro US dollar is a bear. It's trading lower, making lower move lows and lower move highs. So it doesn't matter what your thought process is, it's definitely a bear market. So one of the things I would be very mindful of is that we have the situation in Ukraine, obviously. The peace talks, if you will, what have you, that are going on seem to be to some degree helping things out as far as calm down the currency markets and the other markets out there abroad. So we'll have to see how this pans out. I would think that this is not going to end as quickly as maybe some people would be hopeful. I mean, it would be nice if it does end quickly, but I don't think it will. So this is going to add pressure to the euro, but right now we have dollar weakness because we have profit taking. So I would follow through with the short-term play. It's a good chance that we'll cross this 111.53. I think 112.32 is where you're going to run into a lot of resistance. Remember, this is overall a bear. I look at this right now as an upside correction. And then we are going to find some heavy resistance, and then most likely go sideways to lower again. There's a lot of fundamental factors that that are driving this, everything from oil to interest rates and what have you. And just since we're talking about the interest rates, when you go to our market tab and you go to futures, we can pull up. Now that for commodities and for futures, you can't broadcast in live feed. That's by law. So, but we can take a look at how the day ended yesterday. Now, as you can see, there was a lot of gyration yesterday, but this market had already tanked. Interestingly enough, it did not make a lower move low. Okay, so now let's take a look at the CME website. Give them a little promo. So we go to their interest rates and see where they're trading right now. So here we have them at 152.17. Now this is very important as far as pricing for the dollar. So 152.17 puts it right there. Okay, so right now we are about a half a buck away, or just a little more than a half a dollar away as far as bond terms from the close of yesterday. So as rates right now in the market are easing off, that gives pressure to the dollar and gives strength to the foreign currencies. So the euro, the pound, etc. This is why we are seeing these follow through corrective moves. Right now, you got to remember that the dollar index is a bull, and if right now as you're making higher move highs and higher move lows, that is still a bull trend. And as far as these currencies, they are making lower move lows and lower move highs, and that means they are in a bear trend. So they have not had a confirmation of any major turn in most of the currencies versus the dollar. However, there is divergence. We'll highlight that as we get into it. And if you haven't done so already, make sure you like, share, and subscribe to our channels on YouTube and Twitch. And also, if you have any comments, leave them in the chat, and we'll get to them. We'll answer your questions as we get through this webinar. All right? So don't be shy. All right, so euro US dollar, should we take out this last swing low from a few sessions back at 109 even basically? This would be very bearish. I would not try and catch a falling knife here. If this does take out this low, it's very likely that we're going to make new move lows on the weekly basis, pushing this market down to 107.5. Okay, so that's where we are with the euro. Let's go to the British pound US dollar. British pound US dollar, we had a buy signal here 2 sessions back. This is a bullish engulfing line. If you read my book, High Probable Japanese Candlestick Patterns, you can learn how to trade those. All right, now remember, this is a corrective move as far as this buy signal. It's a counter trend move. So since you're not going with the trend, there's a special way that you trade this. Once again, that's highlighted in the book. So far we have taken out the last previous lower move high. That puts us in neutral because we are coming off a lower move low. We've made a higher move high. That puts us in neutral right there. Plus we have this buy signal from 2 sessions back. So the way we look at it is, we definitely are looking for a continuation of pressuring of resistance. So a little more bullish momentum to come back into the market, especially as the dollar falls under pressure during its corrective move. Okay, so that would coincide, it would link these up, and that would aid this rally to continue over the next few sessions as we head into next week. One thing I would be mindful of is the low from 2 sessions ago. If we fall through this here, do not try and catch a falling knife. Once again, that means that this bear is really raging. However, with the pullback in oil, and now with the little bounce in interest rates from the market's point of view, because we don't have a Fed meeting for a little while yet, so we know another 1/4 point to a half is looming. However, the market right now is dictating, because the war is still going on, it's a little flight to quality. This meeting's over, 1/4 point was shot, boom, now we get a bounce, and it goes the opposite way. Meaning, once again, also pressure on the dollar, giving credence to corrective moves in these other currencies. All right, so we have 133.25 to 134 even basically as our upside target objective area. You can see there was consolidation here. There was a low here. It was a low here, became resistance, and then that was where we had an explosion over in this area here. So very pivotal area, a good place for us to rally up to and then fall apart or consolidate. So we'll see where the dollar is and what's going on with the war in Ukraine once we get to that area over the next week or so. All right, U.S. dollar, Swiss. We had a spike high yesterday, and we have followed through to the downside today. Yesterday we were looking at the potential of the previous. Yesterday we hadn't made this new high until after the Fed meeting, so we had a big spike run up, and then boom, the market has reversed gears. I would look at this right now as a short-term reversal, obviously, from the trading that went on yesterday and how it ended, and then coupled with the follow-through here. If you've been watching and listening to our webinars, I always remind people that markets tend to go out like they come in. Oops, we don't need that. You can see how I had this line already drawn here yesterday, and now we're starting to pull back on this. So for us to correct back to this 92.80 to 92.48 is very likely, once again, while the dollar is under pressure, especially if 30-year Treasury bond and 10-year notes continue to rally, meaning go up in price, which means down in rates from the market's point of view. That would help to accelerate the decline of this trend, and the momentum you can see here was very, very strong over the last week and a half, propelling it from 91.5 all the way up to 94.5. That's a $3 move within a period of a week and a half. Very strong dollar strength. So now think of this as a profit-taking corrective move. Once again, it coincides with the dollar index. Sorry, excuse me, my tongue is a little twisted. I need to have a little drink of water here. Okay. I'm back. Okay, I can talk again. That's good. All right. So thank you very much for the like on a couple likes there on YouTube. Appreciate that, guys. Hopefully you tweeted it out also. Leave a question if you have any. Same thing with Twitch. Okay, now let's go to the U.S. dollar yen. This is the one. Yeah, baby. We've been talking about this one for months. You know that I've been long this for a while. All the way from last year, and it's been a grind the last month and a half. As you can see from January, we started off the year up here, and then boom, we just were in a range trade bobbling me out. So this has been tough for me. I've been sitting on this for 2 months, going nowhere, just taking a little bit of heat on the, well, actually pulling back on my profits, but it definitely now, as you can see, we have had a nice explosive rally going on. So I'm very happy about that. Overall, we hit my 117.5 short-term target already a few sessions ago. Yesterday, we spiked high. You can see today, this one's still hanging basically unchanged on the day. So where dollar weakness is coming into play, it's not so much with the U.S. dollar yen trade. This is a raging bear. Has just made its big explosive move now. I would expect some consolidation possibly over the next week or two. If we have a pullback, now remember, if markets go out like they come in, let me move this over one to there, that would mean that today is hopefully starting the momentum to slow. We'll probably have a little reversal, come back. If we get below this 116.97 especially, that really has a setup to come back to this longer term extended downside objective of 116.25 to 115.81. That would still be above this upward sloping support line, keeping the long-term trend intact. And I think that as you have dollar weakness, this would be a good time for a big profit-taking slide to squeeze out all of your weak longs, and then also as it finds support, squeeze all the weak shorts all the way up, and then as it explodes to new highs. I have 122 in the longer term as an upside target, especially with the fundamental conditions going on between interest rates, oil, the war in the Ukraine, and all kinds, and the fact of how the economies are or are not coming out well of the global pandemic, if you will. So these all weigh on the U.S. dollar yen trade, where if the dollar is weak versus all the other currencies out there, it is very likely that the U.S. dollar yen will still remain a bull, meaning dollar strength here and yen weakness. Now, there's other trades that you can look at. I would look at the pound yen as a very good trade right now. In fact, GBP, JPY. So this one here, as you can see, is a little bit lower on the day. It blew through our upside corrective target here yesterday. We had a buy signal. This here is a 3 inside up buy signal. That's where you had this down day followed by this small positive day here, and then this big rally here. That is always a very good valid buy signal. It has a very high probable Japanese candlestick pattern, one of my favorites. And as you can see, we made it up to our upside target. We superseded it yesterday because of the Fed meeting. Now, interestingly enough, the pound yen is starting to pull back. Well, why is that? Well, right now you can see that the U.S. dollar yen is slightly negative on the day. Okay, so that right there is giving a little strength to the yen versus the pound, because if you look at the GBP USD, the pound's lower on the day. So while the euro is strong, the pound did spike high, but it's lower on the day. So you can the best indicator of the markets is always is the markets themselves. So to follow where the yen is going right now, you can look at the relationship of where the pound is with the dollar, and vice versa with the yen and between the U.S. dollar and the yen, the U.S. dollar and the pound, and then the pound and the yen, to get an idea of where the pound yen is going. So since the pound is weak against the dollar right now, and the dollar is weak against the yen, then that would make the yen be stronger versus the pound. Okay, so very simple. It's a great indicator, and that's in real time. You always want to use these kinds of techniques to gauge if you're on the right side of the trade for that day, and even as far as the trend as well. So these things definitely have influences. Okay, now we have for the pound US dollar, once again, we did have this buy signal. So should we breach this high that we made today and get back above 131.95, very likely to get back up there. This coincides with the US dollar JPY trade, which would help us get back for a test of this 116.97 area, basically 117. And then if we can play around with support there and the dollar still remains weak, boom, I would see you get an extension down into this area right here. All right, let me just pop around and make sure we don't have any questions on YouTube or Twitch. No? Okay, got a few watching there, a few watching there. Okay, you guys are quiet today. We had a lot of people interacting in the past couple of sessions. AUD USD. Australian dollar, US dollar hit our mark yesterday or two sessions ago, and we were talking about it yesterday when it was bobbling in here that it may have found its support. I mean, you had this upward sloping support line here that keeps this trend intact. This lower move low here with this area here was what we needed to take out if it was bearish. It didn't get down to the 0.618 here. It fell below the 50% retracement here. As you can see, it had settled there, and then yesterday or 2 sessions ago was bobbling and trading there, made a little positive move there, and I'm going to show you something. See how it did this little small day here with this update follow through yesterday? That is a big show of strength. This means that this trend here has been higher move highs and higher move lows. This confirms a higher move high up here, a higher move low obviously has sustained itself here, and now this is where momentum is. It's going to the upside. So Australian dollar is one of those markets that right now is fueling a big move against the dollar. However, the weight of the Aussie isn't as strong as, say, such as the euro, the pound, what have you. So because the pound is actually lower versus the dollar today and the euro is up versus the dollar, it kind of cancels out the two biggest weights, but still the euro gives credence to a negative dollar index. But then when you show that the yen is also positive and you see the Australian dollar is also positive, as well as the Swiss, against the dollar, that's why the dollar index is taking a little bit of heat. It's profit taking, remember. But here's the divergence. Whereas with the euro and the pound, we're viewing them as in corrective phases and ultimately bears versus the dollar. We have the yen, which US dollar yen, we are looking at that as an ultimate bull, meaning the yen as a bear versus the dollar. Ultimately, we're viewing any downside movement as a correction. But with the Australian dollar, on the other hand, we see this as dollar weakness prevailing and Aussie strength. So this has to do with the fact that this market's been trending lower for a very long time. Now that they're coming out of the coronavirus lockdowns and what have you, and pumping out commodities at these inflated prices, it is nothing but a benefit for Australian dollar. So, and we shall see, especially as the 30-year and 10-year right now are rallying, meaning rates are going down in the market. That helps to cause weakness to the dollar, which also fuels this momentum to the upside. As you can see, this market is bid as we're talking right now. So that's very strong compared to the other relative currencies out there. Now, New Zealand dollar, US dollar, where it is strong, it is not as strong and as viable as the Australian dollar. However, we do find this still in a bull market, looking to challenge resistance. I just don't think you're going to have the upside potential that we had in the other markets. We had a nice little turn here. This was a buy signal here, this 3-day route that I definitely think you're going to get a lot of follow through off of. You can see today it's hovering right below these lower move highs here, piercing this level here, sets it up for an ultimate breakout of 69.26. But be mindful of, don't expect it to shoot up to like 71, 72 even. Now, could it happen? Absolutely. But I think you're going to see more volatility and explosiveness come out of the Australian dollar than you will the New Zealand dollar. So US dollar, Canadian dollar, here we go. This market's under pressure. It's in the chop zone. It's a big sideways trade. Range traders are doing well. Trend traders are getting chewed up. We had a valid sell signal that occurred back here. This is a bearish engulfing line here. As far as where does it go? Well, that's the thing, is we already hit the zone. So are we going to hold support here? That's a good question. As far as fundamentals, there's a whole bunch of things that are just interfering with this trade right now. So let's get this to clean this up. So we've already fallen down into our 50%, 0.618 area. The question is, will we take out this 125.86? if we could fail from here, then I become bearish, okay, because we're coming off a higher move high, and we would be setting a lower move low, which would then have us neutral to bearish overall. That would also confirm that off of this higher move low, this lower move high has now set the neutral to bearish tone completely, and then we would have pressure on the U.S. dollar. Canada, remember, this would be one of those currencies that, especially right now with dollar weakness, you're getting follow through. I think the dollar weakness is going to prevail versus the Canada overall. So if you have dollar strength come back, raging back against the euro, the pound, the Swiss, and the yen, don't expect it in the Australian dollar. Don't expect it in the Canadian dollar. Now, you may get a bounce. You may have some show of strength with the U.S. dollar, Canada, but I would say that that is a corrective move, a rally to sell. So we are in a sell rally outlook right now, unless we can confirm that we can gain strength. So what we really need to do is take out this last swing high here. If we don't get back above 128.72, we are in a sideways to lower chop, looking more for the lower, especially as while the dollar index is under pressure. So we started off with the euro. Let's go back to that. This one still is remaining near its highs, acting pretty strong. All right, so we have, let's see what we got going on here. We have some people on YouTube and Twitch. Nobody is asking any questions. That's okay, no problem with that. Okay, cool. All right, so back to the euro here. We're expecting, once again, this to follow through to the upside. We'll see how this follows through going into tomorrow's trade. Right now, as far as news and what have you, we've absorbed the Fed meeting, and like I said, as long as the interest rates continue to be where they're at, I wouldn't expect very much of a move going on into the rest of the day. Now, should you get a big rally in the rates today, out of nowhere and through lunch until 2 o'clock, then I would expect follow through in these currencies, especially like the euro rallying against the dollar. Now, so interestingly enough, what you may see is after the bonds close at 2 p.m. Central Standard Time, or actually the whole interest rate quadrant, during that last hour of the stock market, it could very well happen that we see a big surge then in some of these foreign currency crosses. So if we're going to have any action, I don't think you're going to see it until after 2 o'clock. And I think that's because we're going to get in front of Friday's trade with Asia and Europe. And then by tomorrow morning, I think the action's going to be all completed as we go into the head into the weekend. Remember, with the war and everything that's going on, there's a lot of variables floating around. Expect volatility, but just remember to view, especially the divergence and difference of these trends. Be very mindful of them right now, depending on whatever cross that you actually trade. So anyhow, just want to thank all of you guys for showing up today. And once again, if you haven't done so, make sure you subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel. Tell your friends in the trading community, pass it on. We would appreciate it. Help build the audience. And check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, to help you learn how to trade these different patterns and integrate them into your own trading system or methodology, or follow the one that I have highlighted in the book. So with that, I want to say thank you very much. Happy St. Patrick's Day. I'm Teddy Keckstead from Forex Trading Unlocked. You guys